Hey everybody, welcome back to a TopSoil webinar. I'm Mitchell Hora, the founder here at Continuum Ag. And we got a heck of a topic here to talk on in the webinar today, really getting into the nitty-gritty of how our tax credits actually created. We're going to talk about 45Z, of course, one of my favorite topics. Everyone here knows how deep we are into that conversation. But we'll talk about 45Z, but talk about just tax credit creation and stuff in general. This whole space of tax credits is very new to me. It's very new to Continuum Ag. It's something that we're just kind of stumbling into because of the Inflation Reduction Act and because of 45Z, but it's something that I need to be more educated on, and that's why I've enjoyed getting to know Faith and learning from folks that are in this space. And I think there's a lot of really good insight that everyone else needs to be aware of and can learn from as well. So that's why we wanted to have this webinar and share some details and some insights about how the heck do tax credits actually work? How is 45Z going to work? Even though, of course, as everyone knows who's following along our content, we still don't know the rules. We were talking before we started the webinar. There was some indication here recently, still pointing towards a start date of January 1, which is great. But best case scenario before January 1 is just preliminary rules. There's not going to be solidified hard rules by that time. My understanding of the rulemaking process is that's just not even possible. So, but at least preliminary rules, that'd be awesome. So hopefully they get us some of that. But nonetheless, we need to understand the process of creating tax credits, the process of getting this data put together. We've already talked about doing the tax filings and stuff. We had Faith and I's mutual friend Dana on from RSM. So if you haven't seen that webinar, listen to that podcast, be sure to go check out my conversation that I had with Dana from RSM and go and get some insights about how the opinion letters are going to work and what the CPA firms are looking for. Because that's really the prerequisite before Faith and her group can do their job. But
Yeah.
anyway, jumping in probably a little too much, and we'll back things up a little bit. But today we're going to dig into these tax credits and share some insight about how it's going to work on the farm. Continuum Ag, we've been working on carbon intensity, and we're a software company helping farmers to get their data put together for these programs. And that's really what this boils down to is you got to have your data in order, build soil health over time. But there's some real emerging opportunities here. So let's dig into it and go from there. So we need a little bit of background on who you are, Faith, and the company, and you've got some great slides here for us that you had to kind of give us some insight about this industry and stuff too. I think pretty, different and new and not necessarily on a lot of our listeners, radars. So we need to talk about that and how to broker tax credits. How do these credit negotiations work and stuff, and like who is buying these things, and talking of 45Z, and of course, like what can we be doing now, even though we don't know all the details, but it seems like there's still definitely a lot that we can be working on here now to be ready because we know enough about tax credits. It's not going to be that different in some of the functions, I would think anyway. But anyway, without further ado, Faith, really appreciate you coming in and taking the time with us here today. You and I were able to catch up. What was it, just last week up in
Yeah.
Milwaukee at
And
the Renewable Fuels Association meeting. So it was awesome to hang out there and we dug into a lot of this. So it makes me really excited to just share with everyone else too. I know I'm going to learn a lot. And I think everyone else will here as well. But anyway, I'll shut up now. Faith, again, thank you. Introduce yourself and let's dig in.
yeah, absolutely. Well, thank you for having me. It's great to be here and really talk about these upcoming credits. But before I start there, just to give an overview of Mickelson and Company, we are a firm that is focused on tax credit monetization and particularly these transferable tax credits. Really, what that 45Z credit is all about. It's really to help facilitate investment in this ethanol space and in agriculture by reducing carbon emissions and creating these carbon intensity scores that we're all familiar with but waiting on guidance for. And so the key is they're transferable, meaning you can sell the credit, you don't have to use the credit, you can sell it for a discount receive cash payment for that credit, and that's a transferable tax credit. And so our firm focuses in that area, and we're based here in Sioux Falls, South Dakota. And so kind of in the heart of agriculture, Midwestern based firm. We're all attorneys and CPAs, so we're highly experienced in this area. We also have a lot of us ag backgrounds. So we love the fact that the Inflation Reduction Act has created these credits so that we can work kind of, in a space that we love, which is agriculture and ethanol. So we've been around for 20 years, and the reason why we're in this space and we believe we have the expertise, and certainly we do, is we've been working on what was a federal tax credit that is also transferable for class 2 and class 3 railroads. So before this Inflation Reduction Act, that was really the only fully transferable tax credit that existed out there. And so we serve nearly every class 2, class 3 railroad. They're our clients. We facilitate this, and so we can broker these credits to corporate buyers. The buyer base that we have, a lot of the same buyers that are very interested and have a strong demand in these renewable credits. Okay. And so we've been doing that. We also have a team that helps on behalf of those clients to go out and generate and create similar state level tax credits. So we've helped to create these tax credits in 12 states, with the most recent being Nebraska. So they're transferable credits, but at the state level to help facilitate.
So you're creating the credit. Let me make sure I'm following. So you do something with a railroad. Is it building railroad? Is that what?
It's maintenance of the track. So of the railroad infrastructure. It could be your general maintenance expenditures that you have. Or it could be enhancement of that rail, CapEx to bolster that rail.
So you are spending money investing in railroad infrastructure.
The railroads themselves, yep.
The railroad themselves. Okay.
Similar to these credits, an ethanol plant can make an investment that qualifies. They have eligible expenditures they're making that generate a credit, and then they can sell that credit to a buyer.
And the buyer doesn't have to be in the railroad business at all. It's any tax credit buyer.
In that particular credit, they actually need to be a shipper on the rail. So those particular buyers actually do business with the railroad, or they're a shipper on the railroad. They could be a vendor. They have to have the connection. That is different than the renewable credits, where there's no requirement of that regard. You can be any buyer. Now, the difference there, and we'll get into later, is this passive situation, the credit being traded as passive, but we can talk about that later.
Yeah, that's the nitty gritty.
Yeah, that's a nitty gritty. But at the end of the day, upon the Inflation Reduction Act happening, we knew we were experts in this space. We know how to do transferable credits. So we've kind of built this renewable practice, and we work a lot in the ethanol industry, which is why I'm here to talk about 45Z. We also work in agriculture on the large anaerobic digester side and biogas to help support those large dairies, swine operations, and focus on that area of ag as well.
There's a lot of stuff. And of course, it's got to be 45G and now 45Z. Like, we got to get more creative around here with what these are called.
It's a lot of, numbers in the 40s and a lot of letters. That's for sure.
We think even just like 40B, 45Z, 45Q, like that's confusing enough, but you guys have all kinds of different ones you're dealing with. So, another quick kind of follow-up question on this. So these credits have been transferable to an extent for a long time. I thought that, like, part of the Inflation Reduction Act, did it expand a lot of these programs for transferable credits, or didn't it do some stuff just to change, the transferability of these credits?
Yeah, so the railroad credits have had this transferable aspect. We've always had these production tax credits as it relates to solar and wind, and there's been larger, more complex kind of tax equity structures that had to have bigger deals that really big banks participated in. So the Inflation Reduction Act, while extending certain credits, also created this transferability aspect, which opens the landscape up to, folks who want to participate, who aren't the big banks doing large tax equity deals. And it allows folks in the ethanol industry to be able to participate, to say, hey, I don't have to do something that large or that's that costly or complex. We can do this pure transfer and use the proceeds from the tax credit to then make further investments in the industry, with the end goal of the decarbonization, certainly.
But so much of this, and why I think it's great to start with this, is creating these credits, packaging them, selling them to sophisticated buyers, not new. You guys have been doing it for 20 years.
Yep, exactly.
Love it. And at a pretty good price too. And there's a range to them, but like for the most part, a lot of the numbers that you got here, like 90 cents on the dollar or a little bit more, like decent
Right.
retained value
Yep.
for these credits.
Yes. Yes, and we can get into that. I'd love to
Yeah.
give kind of a market overview and
Yeah.
for kind of which the current market, which is kind of leading into our expectations for how 45Z will work.
Love it.
So yeah, maybe
So,
it's
yeah.
helpful if you don't mind, Mitch, just to give an overview of, because 45Z starts in 25, what have we been working on with regard to ethanol today?
Yeah.
And how have we participated? Well, there's currently a Section 48 investment tax credit. And so that's to facilitate investments to help lower the CI score, create efficiencies and lower carbon emissions.
Mm.
And so that investment tax credit as it relates to our audience and what we're doing are really investments in ethanol plant and the industry can make in their own operations to create efficiencies and lower carbon. That is the installation of combined heat and power units. Maybe you have a solar installation or wind, or these energy properties that qualify for this investment tax credit. So the amount of the expenditures or the investment you're making lead to kind of a qualified expense that can generate this investment tax credit.
Yeah.
The tax credit, not to get too far into the weeds, can range between 30 and 50% of the qualified expenditure amount of the investment. And so as an example, let's say there's a $30 million investment in a combined heat and power at an ethanol plant. That can generate, approximately a little less than a $10 million credit that could be transferred. And so that those cash proceeds come back to the ethanol plant to be used in, either paying down the debt for the project or for other financing needs. And so that's the work that we've been doing today for our clients. And that pricing is, there's a lot of factors that determine pricing, but really kind of think about that 92-cent range. So if you have a $100 credit you generate, you can sell it for $92. The buyer's got the value and the 8% discount, and also the timing for which they apply the credit. And then obviously you've just converted a credit that you may not be able to use. You probably can't use, and that's why you're selling it. You've converted it to cash.
Because these are, and you may not be able to use it because if you're an ethanol plant, a lot of them don't pay federal income tax because they're owned by shareholders and the tax liabilities pass on. And then, or number two, they don't necessarily make $10 million worth of taxable income or have a tax liability of $10 million. Is that kind of what you're getting
Right.
at?
Yeah, you may not have the tax liability for that year. Maybe you made a significant amount of investments, and so you don't have a need to use the credit. Or, yeah, in certain structures, if you've got a cooperative model or other ways in which your entity structuring allows you to pass through the credit. But again, because the credit is treated as passive, and we can talk about what that means at a high level. It's only passive income for those that if you're someone who's passing through the credit to your members or in a cooperative structure, those are individuals and it's reported on a K1. Those individuals can only apply the credit against passive income. So it can't be income that's active from the business. It wouldn't be income that's, derived from
Like the farmers, right? So if the ethanol plant was creating a tax credit of this nature and you're a farmer and a shareholder of that ethanol plant, you couldn't utilize this tax credit to offset your tax liability that was generated by selling corn or selling
Yep,
soybeans
because that's
because that
you're
was
active in
active.
the business. So it can't be, interest and dividends and it's like passive income, like rental, real
What if
estate
you're like a
income.
landowner, right? Or you're a retired farmer who now rents out your land to somebody else? Could you maybe utilize that?
It's something I would say that there's so many specific nuances and details to individual tax situations. You'd want to consult with your tax advisor and CPA
Okay.
on what qualifies. But at the end of the day, it becomes complex if you have multiple members. And can everyone take that allocation, or can only some or a few? Is it easier to structure, a transfer to where everyone still gets the benefit from the transfer
For the
versus
most
trying
part,
to allocate the credit?
yeah, for the most part, what I'm hearing is people are anticipating transferring the credits or selling the credit versus allocating them to the
Yeah.
shareholders
In a
anyway.
lot of cases, the transferring makes sense. But if you have the use certainly then it's great to use the full value of the
Oh
credit.
yeah. Yeah,
So
yeah.
you
If you can
just,
use the credit dollar for dollar, it's better than only
yeah,
getting 92 cents on the dollar, of course.
right. So you just kind of need to do that assessment. And the folks who are our clients have done that. They work with their CPA firms
Yeah,
and their advisors to make the determinations. And then, as they make the investment, for us, we do like to start to work with them early on. We can talk about the market pricing. So to help them with the economics and the understanding of how that this market works. But that's basically what we've been doing up until this point. We've been working on these investment tax credits, and a lot of our clients who are have generating investment tax credits, they're also gearing up and they're planning for these 45Z production tax
for sure.
credits.
For
And
sure.
so we can talk about later on how, from a buyer perspective, the buyer of the credits often, will love to do a deal where the same seller of their investment tax credit, they'd like to also buy those production tax credits,
For
have a
sure.
relationship to where they know who that seller is.
Yeah, yeah. You already have a relationship between the buyer and seller. Now you're just adding more product to buy, right? You have inflation,
Right.
or you have investment tax credits, and you have the 45Z tax credits. You can sell them both in bulk and make bigger deals, right?
Right.
So
And you just don't have to take the time. There's always a little, you want to get to know the counterparty you're
yeah,
working with.
sure.
You do some diligence on the company, and you want to make sure this is a counterparty I want. As you continue to repeat it, you already know a bulk of the information, already about that counterparty. So then you're working more on the funding versus I need to do a bunch of diligence to even know who this counterparty is. And
Yeah.
so they really do like to work with the same parties if they can.
But that's also probably where a broker like you guys that can help to facilitate that and facilitate the relationships and stuff and do the diligences would be a really important thing.
Yep, if we can, we try to structure that to where if we can continue on with long standing ongoing relationships with recurring opportunities, that's great for everybody
That's
involved.
awesome. Real quick, final stuff. I don't want to dwell on this too much, but this investment tax credit, did you say it was also part of the Inflation Reduction Act?
Yes, so this
Okay.
is the Section 48
And it's
investment tax
brand
credit.
new. It was brand new in August 2022 with the IRA.
These energy properties that were set forth in this credit, yes, was
Okay.
enacted. It became transferable, and it actually expires at the end of this year and would be
Uh,
replaced with a Section 48E, which
uh,
is a whole other credit that we can save for another discussion. But these investments have been ongoing, and there are requirements. The difference between an investment tax credit and what I'm talking about here and a production tax credit is the investment tax credit also has some longer term requirements to continue to operate these investments, these properties. So there's what's called a 5-year
yeah,
recapture period, meaning the ethanol plant, let's say an ethanol plant makes an investment, if it's a combined heat and power, or they've got some solar, that needs to operate for 5 years to have that tax credit over the life of the 5 years for it really to be realized. If for some reason, let's say, something happens with an ethanol plant, they're no longer operating within that 5-year time period, then there could be a recapture by the IRS can come in and say, we're disallowing a portion or all of that credit because you didn't operate for the 5 years.
yep, yep. Got it. Yeah, you can't just buy this thing and then not actually use it and try to claim a credit.
Right.
You got to actually
Exactly.
reduce your footprint or reduce your energy use or whatever.
Right. Whereas transitioning now to these 45Z credits,
Yeah,
these are production tax credits. And so you do not have that 5-year recapture period with
sure.
the production credits. The credit is earned as the volume or the activity is produced. And so there is no 5-year recapture. And so while the market has not yet started and we don't have guidance, we expect, based on volume size and how much, of the production tax credit is actually being transacted, pricing could be, in the 90 to 94 cent range. It might be a little elevated because you have less risk. You don't have the 5-year recapture risk. So we expect to get competitive pricing there. But again, certainly based on the size of the production tax credit. And the reason for that, or why I say that, is there's still this work required of a buyer to do their due diligence. And so they've got to do some work. You have an agreement, obviously, to sell the credit. And so you enter into a purchase and transfer agreement. You're going to have your attorneys look at that. You have to file a transfer election statement on both sides with your tax return. You want to do the diligence again. You want to ensure that it's a valid credit. And so the larger the credit, let's say you have $100 million tax credit that you've generated, and if you buy it at a 94-cent price, or for 94% of the value of the credit, that's $6 million to the bottom line. So you're doing that work, but you're capturing $6 million based on that discount. So you
Yeah.
think about that discount rate, which is a real nominal value of cash. But then also the buyer can say, the buyer makes an estimated, a quarterly estimated payment for their tax liability. And so the buyer could say, hey, I'm going to buy this credit and I'm going to wire that $96 million out, or $94 million out, on the same day that I should be making my $100 million payment. And so 94 goes out, but they've short paid or applied a credit for $100 million out to their estimated payment. So time value of money provides an internal rate of return that is highly attractive for the buyer.
That's awesome. It's awesome.
So yeah, so then the bigger amount, there's more money. Now a smaller credit, let's say you've got someone who's generating $1 million credit. The buyer needs enough kind of that nominal cash to make it worth their while to do the work. And so that pricing could be more at the 90 cents, because then they at least have $100,000 to the bottom line to incent them for that work.
Our friend Dana was talking about the same thing. Like, if you're going to really do this, she was saying you probably got to have like $10 million worth of credits to go and sell. Do you think that's kind of right? Or you could still do $1 million, but you're probably going to get quite a discount on it because you still have a lot of fixed costs and a lot of hoops to jump through to get this done.
Yeah, or we can talk later about maybe there's a pooling concept. We'd like to kind of, as we aggregate these credits, if they become uniform and we have standard contracts, we're lowering cost because we're creating efficiencies. We can kind of pool with this uniformity, so long as the diligence is right, to package these things and aggregate them into larger volumes. And so we're working on that. So the more kind of aggregated Z's that we can have, we think then that, whether if someone's got $3 million a year, it's still great, right? We can take that and take it to market, find the buyer, or, aggregate that to ensure that we can get the pricing that makes sense for everyone. But in the investment tax credit, if we backed up to investment tax credit, there is insurance that you can purchase. It's called tax credit insurance. Sure. That's because that 5-year recapture, some buyers are like, oh, we just don't want to sit on that risk for 5 years. There's an insurance policy that could cover that recapture period. That costs about 2 to 2.5% of that credit value, or 2 to 2.5 cents, let's say. So if it's at a 92-cent credit that we call it in investment tax credit world, then maybe 2 cents would be for the insurance. So the seller would net, kind of a 90 cents.
Yep.
Now, in the production tax credits, because you don't have the risk, you're not insuring for a 5-year recapture period, there still could be production tax credits insurance, but they're not insuring it over a period. So it's ensuring the validity of the credit. Does it qualify to generate the PTC? What's it covering? But it's probably cheaper. So it might be 1 to 1.5 cents of that amount. And so whether there's insurance also could elevate pricing, because then people don't have to worry about the risk. They've got an insurance policy that covers them.
I think this is going to end up being really important, right? Of like, hey, we don't really know yet how the farmer data is going to be reported in, or how we're going to really quantify the actual carbon intensity of the biofuel that's being produced. Like, what if they do change some of the calculations or change some of the rules? I think that's where still having some insurance here is probably going to be important. To make sure that, hey, if some of the calculations do change over time, or we get additional clarity, or audits occur and we did the math wrong at some point or whatever, like, I think having that insurance is still going to be important to make people.
Yeah, I think the insurance industry will say we want to see the guidance so we can be appropriately underwrite a policy. But I think, from a carbon intensity, if there's, some change that would cause the plant to not qualify, or some nuance, or from a carbon intensity perspective, we're not sure how the insurance industry is going to develop these products, but like from a CI score, there could be different types of coverage. We know in the wind industry and solar, kind of early on, there was insurance. There's insurance that cover more things that, hey, do you qualify? But as the market matures and time goes on, a lot of those don't have insurance anymore. We don't know what'll happen in this market because we're not there yet. But we could see, there's probably evolution over time. And, the buyers in the market dictate, what's my risk tolerance and what am I going to require? So
Yeah.
it's possible that it could have, or conversely, if the ethanol plant just feels not comfortable to make, in all these cases, the seller provides an indemnification to saying, I'm selling this. If something happens, I will make you whole. I will indemnify you if for some reason the credit is not valid or it's disallowed. They can buy the insurance policy, name the buyer as an additional named insured to kind
Sure.
of cover that indemnity. But in some cases, as a market matures, it may be, yes, we'll indemnify it, but it's just kind of now become so standard and everyone
You
has
know
these
that it's
juries and
fine and nobody's had major issues and stuff. But at the beginning here, there's going to be a lot of unknowns. So that's
right.
where it's going to be probably needed.
And
Um,
so, yeah. And so then we right now we've got the 45Zs for 25, 26, and 27.
yep.
And, whether that's extended or not, we know we've got a very strong kind of trade and industry groups really working hard on all of our behalf on that. And
Yep.
we feel really good. But
And bipartisan bills introduced in the House and Senate to
yes.
push for it now. So that's really good.
Yep.
We need the first, our take is we need the rules first before we can extend them, but that's besides the point. But anyway, yeah. So the longer that it goes on, it could actually mature, and some of these things
Yeah.
work themselves out.
And pricing, and it could impact pricing because, again, if you
Yeah.
find a counterparty that you can work with on a recurring basis
Yep.
and kind of repeat the same thing, and right now, a lot of the buyers we feel would be very interested in saying, I'd love to, I'm going to contract for all 3 years at
Sure.
once. Now, you don't pay for the credits at once or upfront. The credit needs to be paid for within the tax year that tax credit is incurred.
Sure.
But they could set up a contract or a commitment to say that they're going to do that. And so when you have these recurring, opportunities, that also, is a factor in pricing.
For sure. What about pricing? One of the questions that I get a lot is what about pricing over time going down just based on simple supply and demand of if there becomes more of a supply of tax credits from 45Z, from investment tax credits, and all the other gazillion different types of credits. Do we ever water down this market in general by having so many tax credits being brought to the market that the the value of them goes down? Or are we talking like, do we know what the market size is today? Like how many tax credits are sold annually versus like what's the overall demand for?
Well, someone should fact check me, but I don't know if it's to the double digit to $100 billion a year in tax credit generation. And I'm again don't have the exact numbers, but if we figure it's something quite large, but
Yeah,
then if you look at the annual federal tax liability for like corporates across the United States, it's significant. And again,
a
I don't know if
trillion.
this is the right
I
number,
think
but
that some
for
of the stuff
several
I've seen in the
hundred
past
billion.
too is like this market today is like $50 billion or something like that is how many tax credits are sold annually right now. Call it 50 billion. But the US corporate tax bill is like north of 2 trillion or something like that. Like
I think I mean, again, don't quote me, but yeah, it's something into the tune of probably north of that, honestly, on the potential for the credits, depending on guidance and
sure.
depending on how it plays out. We're not sure. And the annual tax bill, if it's 400 billion, somewhere is larger than the credits. Now, not everyone's going to do a credit.
Yep.
There's limitations on how much you can purge. There's a lot of complex rules, but we don't know where the market will settle in the future on pricing. The demand that we have seen, is still strong. It's been strong in 24. But buyers are still getting educated on these transferable credits. And so as the credits start getting generated and depending on the guidelines and how this works, if there's a significant amount of these production tax credits in 25, maybe time to just absorb them or to process, we're not sure if that would lower pricing or if it stays strong. We don't
Sure.
know. We'll have to see,
Well,
but
but in
we've
the
been at the
production tax
92 range.
credit, you're talking a maximum of $1 a gallon. And in total, US biofuel for like just ethanol, biodiesel, renewable diesel, you're talking a max of $1 a gallon, a max of 22, 23 billion gallons a year. So 22, $23 billion total. That's if everyone got their CI score to a zero, which not going to happen anytime soon. So we're only talking this current biofuel market bringing $20 billion worth of tax credits to this market. It seems to me like it's a lot, and it would influence the overall market, but not anything that substantial that it would make a significant supply and demand shift.
There's just so many credits out. You've got such a wide range of these credits, and buyers also have different buy box criteria based on the size of their own tax liability.
Okay.
So you've got buyers who, there are buyers who have well north of $1 billion, $2, $3, $4 billion annual tax liability. They're not going to look at credits that aren't in excess of $100 million or
Sure.
some value. So there's tiers of buyer, I would say, based on what the
Sure.
size of buyer they are and what they're looking for and feel
Got it.
comfortable with.
Got it. Got it. So my buddy Tate is getting us some questions and stuff, and for some reason I can't see the actual chat. But folks that have questions, definitely put them in the chat or put them in the Q&A function. Diana's helping me out here, but and Tate, I'm not sure on your McKinsey Law of Three question. I'm not really following there, so we need a little clarification on that. But any talk in this space about the ESG components of all of this? Some of these type of carbon credits and credits have been pointed to as greenwashing and stuff. Like, is there any risk of any of that stuff in this, or any talk, or how are they, I guess, factored in? Like, is this actually creating some type of a positive environmental outcome, or do they really care?
I would say, we only focus on these federal tax credits. And so we don't really get into any of these other recs or any of these other kind of, environmental credits or that have attributes. So we're not in that space. So we're not really actively talking to our buyers about that. We've had buyers just ask about that, or they like if they're buying a tax credit, that's a tax credit that, we would be in the market for. So a transferable tax credit,
Yeah,
they do like to say, are there other environmental attributes? Or we'd like to buy something that has as many attributes tied to it from an environmental or an ESG perspective that we can.
sure.
We just don't participate in the space. So we don't get into that detail, but there are some of the larger corporates who have kind of strong ESG policies and want to fulfill that mission. They might have that, but we don't participate in that space.
Yeah, I think my kind of take on it is my thought process and the conversation I've had are along the same lines, where it's like having that this came from a decarbonization effort. That's a great like positive or whatever that makes a nice headline. But you can't necessarily go and also claim that reduction, and like the actual carbon reduction is not what's being transferred here. It's just a tax credit that's being transferred, but it tells a nice story when that tax credit was generated doing something that was good for the environment.
Yeah. Right.
So
Some, and others we have who are interested in the space because they do similar work or they're familiar with, an industry or like they like the industry. Some are more comfortable or they've done solar in the past because that's been around longer, or wind. So they feel more comfortable. Some of these credits we've mentioned, if it's a combined heat and power or an anaerobic digester or biogas, they need a little bit of an education process to become comfortable with what that is. And as our buyers, so we help provide an education, and as our buyers become comfortable, then they feel maybe it's a larger size or they feel comfortable kind of, doing these deals on a recurring basis.
yeah, got it. So and Mr. Wimberly's got a good question here as well that I want to hit on quick, that I was thinking the same thing. Eventually, does there become more of an open public market kind of thing for these interested buyers and sellers, or is it pretty much all going to be kind of hand-to-hand combat and facilitated through like private negotiations, like what you guys say? Or is that how you do it? Like, is it basically private negotiations and you have people that are interested and you call them or email them like, hey, I think I've got something that
Yeah,
you
I
want?
think if
Or
you
is there
flip
any real
to, I think the
mechanism?
next slide might talk
Yeah,
about our process and we can talk about that.
nice.
Just, and even kind of to your high level question, I mean, there are marketplaces, I guess, that exist out there. But at the end of the day, and which is great, and there's, they might have information on the tax credit available on the website so buyers can peruse, and it's a platform, and
Okay.
but you still really need to kind of help in our space, what we do is help facilitate the process from, having a credit that's generated from one of our clients, finding the right buyer, working through the steps to ensure that that credit is appropriately transferred. Our client is paid the proceeds. So we kind of all the way from marketing the credit to closing the transaction and funding, and our buyer ensuring they have a quality credit that they can use on their tax liability. And so there's many steps. And so the process is still highly relationship driven. You need a trusted advisor. You got to know someone who's been in it, understands the process, has been in it, understands the what is required to get the deal done. And so looking at this slide, as it's really, again, the ethanol plant in our case, and for purposes of this discussion, that will generate the credit. And so, once the ethanol plant has determined that they're going to generate the credits, they have a credit, they'd like to transfer or sell the credit. The first thing that they've already done, and there are CPA firms, great firms, Dana, our good friend, is out there, pushing this. You have to have the form 637, that excise tax registration had to be completed in July. And so, and then at that point, you're saying, okay, at this point, guidance isn't there. Some folks, because if they're selling into the LCFS market, or they feel comfortable, or if they've kind of gotten a CI score that at least gets a range, right? I think I'm going to be, or I've got, CCS, or I've got this or that and the other. I think I'm comfortable. I will have a 45Z credit that I'll be able to be producing, and I want to sell that credit. So you work with a firm like Mickelson and Company, we would engage, and basically you have a term sheet that's developed to say, this is what I'm going to be. These are kind of the terms of the deal. Here is, and we would basically go out before that, I should say, and say, we're going to market that credit. So we go to our buyer base, we go out to our network and provide the opportunity and say, this is what it is. Here's the target price. This is what we're expecting, our clients expecting to receive.
Sure.
And we start generating the interest. And then there's a term sheet that's provided to the buyers who are interested. We ask them to submit a term sheet that includes the price they're willing to pay and other key terms. Mm-hmm. That's going to be, we ask, say, all indications of interest, all of these offers need to be received by a date. We review those with our client and with the ethanol plant and say, here's what we've come up with. And a buyer is selected. And at that point, you really start to engage in a diligence process, and you complete the work that's going to be required to facilitate the transfer. As you mentioned earlier, there's a tax opinion or a tax memo that's provided by your CPA firm. Yep. If there is going to be insurance, there's a draft insurance policy that's drafted that buyer will review. That insurance policy is bound on the day of closing because the buyer is named as an insured in that policy. The seller pays for the insurance. So the ethanol plant would be paying for that price. Yep. Your CI score, and what the guidance will dictate, how it's calculated, how it's verified, validated, that information will be relevant as part of this diligence process. There's also a registration number that a seller, the ethanol plant, and they have to do it for the investment tax credits as well. They go to an IRS portal and they apply for this registration number. That registration number is key. It's included on what is called a transfer election statement. So they need to elect that they're going to transfer this credit versus use the credit. And that's going to be, needs to be filed with both the seller and the buyer's tax returns. So, but do you need it to do the transaction? Do you already have to have that registration number in hand to do a term sheet or get a buyer? No, the 25 portal to even file for the registration number is not open.
Yeah, it's still out there. Yeah, the portal.
So we have within our agreements, right? We have obligations that occur for that to be provided. It must be provided before the tax return is filed. So that's kind of the due diligence. And then also you're working on, and the parties have to negotiate and sign in a transfer and purchase agreement. And that includes that transfer election statement with the IRS registration number. So, that's attached as an exhibit. It will be filed with the tax return. And so all of those things happen. And then you prepare for the closing. And on the 45Zs, we would intend that those could be funded on a quarterly basis throughout the year. Sure. So really, and what's great is you'd want to time those out with the buyer's estimated payments. So every time the buyer is purchasing the 45Z credit, they're applying that credit to their estimated payment, and hopefully we can have have the quarterly fundings. Again, all contingent on guidance. That's what we would anticipate. And that's really how the process works. So
Yeah, I love
that's
it.
really what Mickelson helps to facilitate.
A lot of stuff. Let me put some of this in my farmer brain here a little bit. Okay. So because some of these I feel like there's some that we can do right now. There's some that it's gonna still take a little while. Like the order of how this can go is not necessarily all linear, is what I'm kind of gathering, right? So
Right.
finalizing a tax opinion, we're talking the final tax opinion won't even be done until after December 31st, 2025. So sometime in 2026, right? That's when you'd actually get your opinion done. Now you can do quarterly estimates, hopefully, if the guidance allows, right? So the first
Well, the
one.
tax opinion, actually, it'll all come down to when the CPA firm that's going to draft the opinion. So they would go out and they'll write a tax opinion that addresses, can you qualify for the production tax
Okay.
credit? They'll have the information, after, what qualifies, why does it qualify?
I
What's
see.
they're also looking for the verification validation. There's
Yeah.
information that the CPA firm will say, okay, we now have drafted this documentation that demonstrates that you would be eligible and qualify for this production
Got
tax
it.
credit, and it's transferable
So
under,
we might not have the dollar amount locked in right away, but we'll at least know, like, hey, here's the initial opinion letter being put together. You're going to qualify. You're going to be able to abide by the registered apprentice and the prevailing wage stuff. We got a plan for that. We're
yep, and
gathering
that's
data.
really key. Yep.
Here's maybe an estimated CI score, an estimated 45Z amount to put in an estimated amount of volume. So they're even able to utilize some of that, like
Well,
proactive.
I think the CI will need to have that process. So I
Yep.
think from a term, before you have the definitive documentation, generally, if you have an idea, the buyer is not going to say, I'm buying a CI score of X. They're going to say, I have a tax liability of
Yep.
$10 million. And
Yep.
so I feel comfortable. I would like to allocate and purchase $5 million worth of Z's. However, that calculation gets to that value of
Sure.
the PTC, that's kind of more,
Yeah, they don't care
uh,
about the CI score. They just care about the dollar
they
value.
just want to
And
ensure that
that's the
it's
legitimacy of it.
accurate, it's valid, and it's free of risk as much as it can be, because it's gone through the right process. They
Totally.
want to see a tax opinion. If insurance is there, they want to review that policy and understand how the CI is generated, and then it's following all the appropriate guidelines.
Got it.
So that will be in place. I think what your annual production is, but there might be, it may be off plus or minus something because of a downtime or what have you. So it may be, and we don't know because we aren't there yet, but maybe the quarterly estimated payments, maybe you advance a certain amount, or you say, we'll do 90% of 90% of that total estimated volume for the year, and we'll fund against that. And then there's a true up in that final payment to get to that actual final annual production, because it's more going to be how many gallons are produced. So there might be an estimate on the production. You'll get the actuals each quarter. Hey, I did actually produce this many gallons. Here's my CI score. I have the information.
Yeah.
And then you fund on that. And then, at the end, maybe there's a true
Then you
up. So
settle
maybe
up. Yeah, for sure. For sure.
and again,
I think
we're
there's
not
probably going to
sure,
have to
but those
be.
are ideas.
Yeah, I think it's probably going to have to be some of that. But yeah, so a lot of unknowns here. So that's my other question on this, and before moving on is, so there's a lot of unknowns. It's inhibiting number four here with the opinions and the CI, calculations and stuff. There's some estimates, but nothing set in stone there. Are some of the term sheets being talked about and negotiated now for the Z's, or has anybody, like, I haven't seen any like that 100% have been, locked in and completely done. We'll talk about Harvestone a little bit and some of theirs, but are there some term sheets that are starting to be talked about, or is this also kind of in a holding period right now?
Well, there's certainly discussions. There's certainly discussions and buyers who are saying at the high level, yes, we're interested. And
Okay.
so when we go out and we talk to our buyers, or we're marketing, or we've done a deal and we've closed these investment tax credits, we work with the buyers who say, yeah, once we know about 45Z and we have the guidance, we are interested and we have the capacity. We want to work with that counterparty. That's what we
Sure.
try to do. We'd like to have a buyer who wants to take an investment tax credit, or all and the production tax credits, or the full 3 years of production tax credits. And so we've, there could be options and agreements that just say, hey, if the guidance comes out and everything's fine, I have a right to, after the first quarter, when things are figured out, we do have an option if we can agree to pricing to purchase those. Like just to give some, a more, either whether you're putting it in writing, like,
Yeah.
we have an interest.
You
Um,
know kind of what it is. I think that's going to be really important too as the programs actually get worked together on, okay, are we going to be able to compensate farmers for their contribution or other partners for their contribution? Well, we need to know what are we going to be able to sell these credits for to be able to know what can we pay for the data to actually get it done. Um, and we're seeing some of this. So yeah, let's talk on real fast. So the Harvest Stone has three ethanol plants, and they announced that they put together a contract is probably what it is. That's what they did, right? They got a term sheet put together to sell $205 million worth of credits. But now I'm thinking of it as, wait a second, it's not just potential 45Z credits or 45Q credits because they have carbon capture. It's probably also investment tax credits. Would it be kind of all of the potentially all of the other? Obviously, we don't know the details of the deal, but they could be putting together multiple different components.
I think that was, and I'm not familiar at all with all the details, but I think it was a tax equity structure that included and was part of that, for the full time period of a 45Q. And if I read the press release right, it probably at their election, or they have the ability to elect, from the Q to the Z once the
Q or
guidance is
Z, for
out,
sure.
which because obviously there are models, which I think we all know, and you can run the models on the value of a Z versus a Q. And so that was all fully baked into this larger kind of tax equity, like financing
The
deal that
term
was.
sheet was just, hey, we're buying tax credits at this kind of discount over this type of time frame, whatever. However, you're going to create the credits. I'm sure there's all kinds of different ideas, but interesting on that. You guys just had a big press release and announcement here recently too with Gevo and getting some of the tax credits sold there.
That's a biogas. So that's an
Biogas.
investment tax credit.
Oh,
That is for the investment tax credit section 48 energy property is an anaerobic digester. And so that was the investment, that actual anaerobic digester that could be placed on a large dairy operation or swine operation. There also could be placed in landfills and for other uses, capturing the methane, running through upgrading pipeline grade, renewable natural gas, used for transportation fuel. That's a credit. And then there is still some open-ended questions and uncertainty with regard to that qualifying for the 45Z.
sure.
So also need to wait for some clarification there from the IRS.
Got it. Got it. But movement happening nonetheless is really the point. I
Yes.
just looked at the clock a little bit ago and we're already like almost on time. It's crazy. I knew this was going to happen too. And we were joking before, like, oh, maybe we'll crank through and have this done, like, and we'll be done early. No, of course not. So, all right, let's work towards wrapping it. Eric, I see your hand up and stuff too. I sent you a message. If you do have a question, message me back or type it in, and we can definitely get you to pop on and ask your question too if you'd like. But okay, so yeah, let's keep going here though, Faith. So what else do we need to be doing? And yeah, obviously a lot of our folks on here. Actually, I see a wide array of different folks in the audience, not just farmers, but what should the ag community be doing in general or biofuel producers? What's the status here today?
I think this is your area and this is your
Yeah,
area of expertise on the farmer side. Obviously, there's going to be a contribution to the CI score. We work with the ethanol plant because they're the producer, they're the generator of the credit. So that's our client. And we, again, would encourage everyone at least to just talk to someone to be prepared of how the markets work. If you think that you want to transfer the credit or you have you think, yes, I'm going to generate that. And I just reach out to someone to start to prepare. We know that it's an uncertain time. The guidance isn't there, but it's great to have a relationship and just ask some questions and talk further about how the process works so that you can be ready when the time comes. Because when the time comes, it may be a scramble, right? There's going to be a lot of activity. So we encourage, anyone in the industry, if you have questions, reach out, give us a shout. You've got the farmer side. It'll be, obviously there's a lot of unknowns there. And, we've seen, some of the producer kind of premium programs that have already been put in place.
yeah,
And so it'll be also really interesting to see how that shapes up and
for sure.
impacts
Yeah, we're
impacts.
seeing these pilot projects and stuff going, right? Or like the ADM program that we've shared some info about as well, where, hey, we can maybe monetize some of this data utilizing the European market or other programs that are out there, since we don't know exactly what's going to happen with 45Z yet. But I think so much of this, what my head still boils down to is if you are going to be able to get a term sheet, you meaning Mickelson and Co. and tax credit broker, if you're going to be able to get a term sheet, you're going to need to have some data going into that to understand what type of volume are we thinking and how are we going to do that. Well, that's going to take kind of knowing what is our CI score going to be at that biofuel producer, and therefore they need to know what's their feedstock CI going to be. And that's what we've scored over 325 million bushels already. And we know the county by county average CI scores and can plug in any supply shed and say, here's how many bushels we've already scored. Here's what we're seeing for average CI scores and range of CI scores. We never, of course, would share a farmer's actual score or any actual farmer data, but at least we've got some insights to estimate what the feedstock CI would be. And then we've moved forward, of course, too, with our actual verification program where here in just here real soon this month, we're sending the first batch of farm practices and farm data to the verifier to prove that we can actually verify the on-farm CI scores so that it's not just, hey, we ran this through the GREET model and we think this is our feedstock CI. No, we've had third-party verification and gone through an audit that these CI scores actually did happen to improve the accuracy of those calculations and make sure that like we've got some data and some rigor here to help to back this up. So I think that feedstock piece is it's not going to be just as cut and dry of did you put in a combined heat and power system, yay or nay, and you can go to the plant and physically see it and say, yep, it's on and it's going and doing something. Like there's a lot of moving parts to the feedstock component. And of course, we don't yet know if it's going to be book and claim or if it's going to be the farmer CI tied to the bushels. We're ready for either one, but this just seems to, in my mind, it continues to boil down to the missing piece here. And the most critical piece in all this is data. And the legitimacy of your data is going to impact what the buyer is willing to pay and impact what it's going to cost you to insure these things and stuff too. So it all boils down to the data in my mind. And that's why I'm like, I can't believe there's not even more of a push to like gather this stuff and to really get aggressive with the documentation. But I don't know. That's my
Yeah.
little, obviously rant in this. And again, why I was interested in just learning more about how these tax credits go in general, that this is a long negotiation process, it sounds like. And these are very sophisticated buyers that know what they're doing here and are going to need to see some real stuff. Because
Certainly. I mean,
these buyers, they get audited for sure by the IRS. And like they got to cross their T's and dot their I's, and
mhm.
they're not going to take on the liability. They're going to make sure that the liability goes to that biofuel producer, and that's going to force them to get the insurance. But that biofuel producer, their liability ends up being impacted by the on-farm data, again, pending rules. But it's going to be a big question mark if they don't go about getting that diligence done correctly between the farm gate and the biofuel producer. So,
But certainly all ties together, however the model's going to work for the inputs for the calculation. And then to your point, the diligence will be key.
yeah.
And then I think, we want to efficiently as we can to, get this program moving so that we can hit those estimated payments and have a robust program. The actual timing, again, we need to see the guidance and what's required. But on the investment tax credit side, I would say typically from, these energy properties are placed in service or they've, kind of commenced their operations or they've been turned on, quote unquote. And then from there, the CPA firm that is drafting that tax opinion or tax memo, doing a cost segregation study that really it outlines and identifies those qualified expenditures that generate the credit. They need some time to continue to finish that diligence. And so let's say it's 30 days from maybe the placed in service date, and then we're preparing our marketing materials and taking some time for that term sheet to go to market. And then from the point where you have the term sheet, it's maybe another 30 days to finalize the diligence and get that buttoned up and do your transfer, purchase and transfer agreement to get to a closing. So that's kind of the window, as we need to see what's going to be required for this process. But that's kind of what we operate on the investment tax credit side.
Got it. There might have been another couple of questions come in, and hopefully this has been insightful for everyone. Faith, kind of take us home here with your last couple stuff, and we'll work towards wrap.
Yeah, just, this is just a screenshot of our team, the primary renewable team. So Mark and Molly and myself, we try to hit, the industry conferences. And so we're here to help and answer any questions as best that we can at this point. And just again, I'd strongly encourage anyone, if you have any questions or you're interested in learning more about the process or understanding further how it works, just give any of us a shout. We'd love to help.
Yeah,
we love the space. We love participating in the space. So
yeah, and I'm happy to connect anyone with Faith as well. Obviously, we're having a variety of conversations here. So, but no, that's great. And kind of to wrap from my side, go back here. We just here recently took away the paywall on our CI scoring to help get more farmers ready and help these biofuel producers to understand what their anticipated feedstock CI will be. So anyone can get their CI scores now totally for free using the latest GREET feedstock calculator at TopSoil.ag. So go and get that done. Like I said, we've got well over 300 million bushels, but we'd love to get that billion bushel mark put together. And I think, it's going to take some guidance, and then there'll be more farmers ready to go about it. But hey, it's free, and we're running it to the full accuracy of the actual GREET model. So go on and get that. We're putting out as much ongoing information as we can here. And we're talking, there's indication of rules to come. The USDA has been hosting public comment periods and feedback sessions. So I think there's positive movement happening, but a lot of unknowns. Stay up to date with the stuff that we are putting out, on our channels here at Continuum.ag, and join our CI chit chats. We are getting multiple other of these longer form webinars put together as well. So be watching for those. Let me see if I can stop this and see if I can get the Q&A. There it is. So the PowerPoint stuff, it's on the YouTube page for whoever is on that. You'll have it there. Thanks, Mr. Wimberly. Good to have you on. But Faith, any final remarks kind of from your side? Again, really appreciate you taking the time and been super insightful. There's a lot of stuff, and I'm glad that we've got people like you to go figure all this out. We'll just try to, score some, document what the farm practices are, and we'll deal with that. But this has been really awesome.
yeah, I appreciate the time. Thank you so much. Just like back in my old grain days, doing crop tours, we'd love to do an ethanol plant tour, come visit folks. So if you want us to come make a visit and tell you more, we'd love to.
That's awesome. Appreciate it. Well, thanks everyone for joining us today. We'll get this up on YouTube and on the TopSoil podcast here soon as well. And yeah, maybe when we get some more finalized rules after the first of the year, we might have to have a follow-up here, Faith, and get you.
Yeah, you'll have to do another farm party for sure.
We'll definitely have you there. Yeah. So also that is a good point. So we did have Faith wasn't able to join us at our TopSoil Summit here this past summer, but one of her colleagues did. And if you want to see that conversation where we were talking about the full tax credit creation process, kind of from the farm all the way through, you can check that out on our YouTube page as well. We have that panel discussion there, where we had some other insights about all this. But anyway, Faith, appreciate it. This has been awesome. Good to see you again here so soon. I'm sure we'll see you again here soon as well. Thanks everybody for joining us. We'll see you next time.
Thanks.